The CNBC ticker is sponsored by Archipelago.
Good morning. Thursday morning, the 5th of December. This is Squawk Box live from London. I'm Simon Hobbs, sitting in for Jeffrey Cutmore. Controversy in Paris. Jean-Pierre Raffarin's government confirms a €9 billion cash injection for France Telecom. But the indebted giant takes a risk by delaying its full capital increase. Having amassed 16% of its shares, BNP Paribas now piles the pressure on Credit Lyonnais. As its smaller rival prepares for a board meeting in half an hour, France's biggest bank demands cooperation and, according to Le Figaro, a seat on CL's board. Fiat's management asserts control in the face of critics. Before layoff negotiations are even concluded with the trade unions and government, it's reported in Rome that the industrial group will today send out letters to 7,600 staff telling them to stay at home. And heavy lobbying over UAL from bankers and politicians fails overnight. United Airlines' request for a $1.8 billion federal loan guarantee is rejected. America's second largest airline now teeters on the brink of Chapter 11 bankruptcy.
Latest news we have out coming on Dow Jones Newswires from France Telecom. Good morning, everybody. I'm Guy Johnson. By the way, hiring freeze until 2003. Will sell operations that are weak or not controlled. That's the latest from France Telecom at this hour.
Well, news headlines for you. Iraq has accused UN weapons inspectors of spying for the US and Israel and deliberately trying to provoke Iraqi resistance. Terrorists are thought to be responsible for a bomb attack on the Macedonian consulate in Karachi. 3 people have died at the scene. And Gerhard Schröder has said Germany and France will send a positive message to Turkey about its bid for EU membership at the Copenhagen summit next week.
Ahead on today's show, a question not of whether the European Central Bank will cut interest rates today, but by how much. We're live from the ECB's Frankfurt headquarters with Invesco chief economist Jörg Kramer. Neither the Bank of England nor Sweden's Riksbank are expected to use their respective announcements today to do the same. Siemens still looking for business to be down next year, whilst admitting its handset operation lacks critical mass. CEO Heinrich von Pierer will join me in 20 minutes ahead of the German giant's earnings conference. Reducing the settlement risk when trading currencies. Bank CLS is promising a revolution for the foreign exchange markets, and its CEO, Joseph De Feo, will be here at 9:35. Our guest host this morning is Nigel Bolton, head of European equity management at Citigroup Asset Management. Nigel says the present market rally is not the beginning of a long-term bull market as seen in the 80s and 90s. He's expecting a sustained set of rate cuts over the next 6 months in the Eurozone starting today. And he says that the ECB will finally convince investors that its new agenda is to promote growth. In equities, Nigel sees the M&A cycle picking up, particularly in the banking sector, where opportunities, he believes, abound as a result of some fairly cheap valuations. If you'd like to contact us, our email address is squawkbox@cnbceurope.com, squawkbox@cnbceurope.com. Let's get back out to Guy for the breaking news. So we're not getting 20,000 job cuts at France Telecom then?
No, the 20,000 job cuts have already been announced, and I think that's an early retirement program. It's not direct and forced redundancies. That was announced a little while ago. I think what we're now hearing is that we are going to get a hiring freeze, i.e. no more staff to be taken on. That's subtly different, obviously, than starting to cut a lot of people, which is what many people expect that is going to happen. Obviously, the latest news also we have is that they are likely to start to shed non-core assets as well, which is going to be a big issue too. They've got a lot of those kicking around, and they could potentially be worth quite a lot of money. Anything they don't control, they're going to start to sell off. Nigel, can we bring you in on this now? Let's start talking about this France Telecom issue. A lot of detail coming out overnight from the company. Is your first reaction that this is going to be enough to satisfy the market that France Telecom could be back on track? And could this, as a result, signal a turn in the telecom sector?
Well, I think the market's been sort of hinting at that over the last month. Obviously, France Telecom has been one of the better performers in the sector. I think it's up over 50% over the last 6 weeks or so. I think we need to see a lot more detail. The market has been waiting for this restructuring. I think the thing that particularly interests me is what they're going to be doing with their Orange stake as well, and how they're going to, whether they're possibly going to be offloading some of that. That's certainly a stock which we probably have more interested in actually than France Telecom itself. I still think there are a lot of difficulties facing the actual underlying business within France Telecom, and I'm not sure that just addressing the capital balance sheet issues, which I think they're trying to do with this information that's come out this morning, is actually going to be providing a good entry point as a shareholder to be buying those shares at the moment. So I would be standing back. I wouldn't be rushing into France Telecom at the moment.
I mean, it occurs to me there's not a huge amount of detail on the cost cutting at this stage. We'll wait and see what the news conference brings up. And in addition, of course, the full capital increase has basically been delayed. And that is a risk, is it not? I mean, these markets could, I know you don't think they will, but they could turn down. The situation could get worse for France Telecom trying to raise cash.
I think investors are probably going to be relatively cautious towards what France Telecom are trying to do. There are some quite good telecom companies out there at the moment. I think our preference generally is for the mobile area. And as I say, I'm more interested in Orange than I actually am in France Telecom. I think there's got a much better growth prospects going through there. The concern we've had from the Orange point of view is that we thought there were possibilities of a stake coming out from the France Telecom holding. But as a business, I'm not actually that keen on France Telecom itself.
Do you hold Orange or France Telecom?
We don't hold either stocks. Sorry, we hold Orange, but we don't hold France Telecom.
Let's go back to Guy. There's a lot of news around Guy.
There is, yeah. France Telecom, just going to the latest news on Orange. Pontal is going to retire, and Orange is going to continue to exceed market expectations, is the flash that we have coming through. Let's deal with what happened in the United States yesterday, though, before we get back to Europe, so that we can at least set out the field and know where we started from. The Nasdaq was down 1.3. We did see a bit of tech weakness coming through yesterday. This is how the Nasdaq traded. We did see a tick up towards the close, though, and that could provide the European markets with a bit of a tick up as we come into morning trade this morning. We're looking for 20-30 points on most of the markets. In terms of the biggest volume trades, these were they on the Nasdaq. We saw a number of downgrades, particularly from Deutsche Bank coming through in the chip sector. Morgan Stanley was also active on downgrading certain key areas in the tech space yesterday. Intel fell some 2.8%. In terms of the Dow, this was the story that really drove us yesterday. We saw a pickup again towards the close. If I can get the computer to work, let's not bother with that. I'll show you our main gainers. Philip Morris did well, UT did well, P&G, Coca-Cola and Johnson & Johnson. But on the downside, it was significant that we saw Walt Disney down again after the disappointment coming through with its Treasure Planet film. Hewlett-Packard, obviously, the previous day had lowered guidance, and we knew this was going to have an impact in yesterday's session. They did say that the cost-cutting expectations as a result of the Compaq acquisition were going to be higher and earlier than originally thought. Intel, again, we've already mentioned what did trade lower. International Paper got hit as well. Let's bring you through some news that we're also getting through from Europe at the moment. 6 continents coming through with numbers. Year pre-tax profit before exceptionals, £558 million. We are obviously looking at a demerger story on 6 continents right now, and many people believe that the shares won't go anywhere until this demerger story is sorted. It remains cautious on the extent and the timing of the hotel recovery, and it's even more cautious on the hotel prospects for 2003 than it was at the end of September. So it does see the situation in the hotels market decreasing, and that may hit the stock a little bit later on as well. In terms of the Siemens figures, Siemens does not see, and this is a big story actually, this could be a big story, and they're again reasonably negative, and Heiko Compera is going to be on very soon. Siemens does not see a significant improvement in economic conditions in fiscal 2003, i.e. we are going to have to wait until 2004 before Siemens believes that things are going to recover. And Siemens is in a number of markets, so if it's saying that, that's obviously reasonably bad news for the European space this morning.
Well, indeed, and a fifth of the sales obviously coming from Germany, Guy. Obviously, the CEO is going to be on in about 10 minutes' time. I'm not sure that actually, to be honest with you, advances where we knew we were, given the Financial Times interview that he did earlier in the week. Because he did say that there would be that the business would be down in 2003. Oh, he's on in an hour's time, I'm told.
I thought it was on to 10 past.
Oh, bit of a shame.
We must have had a mistake on one of the earlier boards, I think.
Yes, unusually. 10 past 9, that's it. They've obviously got their earnings conference, which I think I'm right in saying starts at 11, Guy. Big questions on the mobile phones, as you'll be aware.
Yeah, mobile phones, they stay in that space. What happens with some of the non-core areas as well.
He likes it, apparently. He likes mobile phones because they've given Siemens a young and dynamic image.
Which lifts don't necessarily give you.
Are you excited by Siemens, Nigel?
I think it's an interesting company. I mean, I certainly like what they've been trying to do within the business in terms of the cost cutting that's been coming through. But they are really facing, a number of very difficult areas. Handsets certainly, they've said they haven't got critical mass for that. That's a very difficult area. We've really got to, I think, one of the areas we should be probing with them is what they're going to do with it, where they're really going to push themselves. But power, they've been doing reasonably well in what has been a very difficult market. The medical side actually has been very strong, and I think there we're looking for good margin improvement coming through next year again. Automation, that side has been a little bit disappointing. They were talking about margin improvement coming through there earlier in the year, and that doesn't seem to be the message that we're getting through. In the last month or so, they've been playing that down a little bit. So again, another area we should be probing, I think, this morning.
Moody's put them on a negative watch overnight. Is that something that will worry shareholders coming into this morning's session?
Yes, I mean, I saw that come out last night on the screens, and I think that is certainly disappointing. Probably not a great surprise. If you look at where their bonds have been trading, I think that probably had been sort of partly in the market, but it's not a positive.
You got anything else, Guy?
Anything else in terms of news flow, or anything else in terms of Siemens?
In terms of news flow.
Well, there's bits and pieces coming out on United Utilities and stuff like that. We'll wrap it all up and we'll do it a bit later on.
Yep, OK, all right then. More from Guy and obviously from Nigel Bolton, our guest host this morning, head of European equity at Citigroup Asset Management. Well, as we said earlier on, it really now seems to be a question not whether the European Central Bank will cut rates at 1:45 Frankfurt time today, but by how much. We're live from the European Central Bank's headquarters in Frankfurt. Invesco's chief economist, Jörg Kramer, will join us after the break. Also covering the story throughout the morning, CNBC's Don Holland. 12 minutes past 8. Good morning if you just joined us. This is Squawk Box, Thursday morning on CNBC, the 5th of December. International news with Serena Al-Awa.
Thanks, Simon. Good morning, everyone. Iraq has launched a scathing attack on the UN weapons inspectors, accusing them of spying for the United States and Israel. Vice President Taha Yassin Ramadan also claimed the inspectors were guilty of provocation, saying a visit to a presidential palace had been intended to trigger Iraqi resistance, giving a pretext for war. In the United States, Deputy Iraqi Prime Minister Tariq Aziz had a similar message.
My guess, my conviction is that the war is not because of weapons of mass destruction, because the whole issue of weapons of mass destruction is a hoax. It has been used as a pretext in order to wage a war against Iraq.
The Macedonian consulate in the southern Pakistan city of Karachi has been severely damaged by a bomb. 3 bodies have been recovered from the wreckage. One of the dead was a security guard who was believed to have been killed before the explosion. Police believe it was a terrorist attack, but no group has claimed responsibility. Turkey's ambitions to join the European Union could move a step closer at next week's summit in Copenhagen. Chancellor Schröder has promised that Germany and France will together send a positive message to Turkey at the summit. Despite the diplomatic moves, though, many EU members still have their reservations about Turkey joining the bloc. Here's weather for you. Fine through Iberia, but in the eastern Med, look out for rain and thunderstorms. 16 degrees centigrade the high in Athens today. As we head north, becoming cold with cloudy periods through western Russia and Finland, snow through Sweden and Norway, and rain through the Low Countries and Paris today. Top temperatures in Europe for you: Berlin 5, Brussels 6, Zurich 4, -1. Pretty nippy down there in Stockholm. That brings you up to date with the very latest on the world news front. Let's get back to business. Simon.
Not great weather, really, for charging on a white horse over the rooftops of the Netherlands, throwing gifts down the chimney. It is Sinterklaas Day.
Sinterklaas?
Yes. Tonight. Guy, you don't think it's today?
Well, apparently it's actually tomorrow, but it's the eve this evening, so that's what happened.
Really? I thought it was today.
Well, I was
very
corrected
disappointed.
by our detailed research team, which came and chastised me for making an earlier mistake.
What, that ropey old load of vagabonds that puts together today's Business Europe?
That'll be the one.
A cross between goths and vampires. Well, I thought it was tonight, and as you'll be aware, that this is when the kids get the presents, either today or tomorrow, rather than 25th of December. You knew that, Nigel, didn't you?
Absolutely.
And the bad people who come through spanking naughty kids with their canes, misbehaving children possibly taken back to Spain. It all goes on in the Netherlands, as you'll be aware. 8:15, let's, what should we do? Take a break? Yes, let's take another commercial break. Pay some bills for the mighty General Electric and Dow Jones Newswires. Up after the break, we'll talk about the European Central Bank. By how much will they cut rates today? And our guest host, Nigel Bolton from Citigroup Asset Management. Thursday morning, CNBC. Past 8, welcome back. Still to come on the programme, the CEO of Siemens will be with us and we'll talk to CLS Bank about settlement of foreign exchange risk and, of course, the France Telecom and BNP story. Don't forget, today you've got a board meeting, actually at Credit Lyonnais, that's starting in about 30 minutes' time. And in advance of that, if you believe Le Figaro this morning, Banque Nationale or BNP Paribas is demanding a seat on the board and telling them that they must cooperate with their new big shareholder, who, of course, now owns some 16%. Nigel Bolton is the head of European Equity Management at Citigroup Asset Management. Nigel, you reckon then that clearly the bottom's in the market at the moment?
We've been saying this for a couple of months now. You know, what we saw really at the end of October, to us, had all the signs of being the capitulation phase. You know, we talked about the comparisons with history, bear markets, you know, average of 33 months. We've been there. We've done that extent of fall that we were looking for. We've had the time period that history suggests, you know, the bear market ends.
And we had
valuations. Well, we had the completion of the markets for continental Europe, for the Nasdaq, for the technology sectors. The UK and the US market, where we had, you know, sort of a 50% fall, did not have the great extent of fall that you saw that history would have indicated. But certainly for continental Europe and for the technology area, you know, we had 75, 76% falls. Those sort of falls are the types of falls we've seen in history in big bear markets. So we think that's ended. Also the valuation story. And that, I think, is one of the crucial aspects. You know, you can get a yield now on equities in Europe that is greater than you're getting on cash rates. And I think, you know, from the asset allocators' point of view, what we saw really at the end of Q3 was UK pension funds looking at their asset allocation and saying, on average, we're 38% in equities. It's the lowest we've been in recent history. And looking at the valuations, equities versus bonds, equities versus cash, this does not make sense. So we've seen money coming into the market. That's what we've seen in the beginning of Q4. Part of this rally over the last couple of months has been asset allocators shifting money from bonds into equities. And I think that's still got further to go.
Just help me out here. I learned that a number of houses are increasingly taking on technical analysts. Won't all those technical analysts be telling them that actually that there's a sharp correction still to come? Well, are they ignoring those analysts?
I don't think you ignore any piece of decent research. You know, I think what technical analysis tells you is psychology of crowds, and I think it works very well at major tops and probably major bottoms. And certainly our analysis indicates that we have seen the major bottom. I know some technical analysts are still saying this is just a rally in a continuing downtrend, and we're getting up to that resistance area, and then we're going to take a lurch down again. I don't think that's right. I think we've seen a fundamental shift, and at the end of the day, fundamentals will come through. That's what's most important here. And the key criteria is, you know, what is going to happen to economic growth. If you tell me that we're going into an era of deflation and another recession next year, then I'm not going to argue that equity markets are going to go up in the face of that. We don't believe that. Our case is that we're actually going to get economic growth improving next year, coming through from the US, also the UK.
Let me tell you that I think that we're going into, or let me put the argument that I think that we're going through a period of huge uncertainty, and that the United States ultimately, with or without its allies, will wage war on Iraq, and that the price of oil could shoot up. Does that change your analysis?
The price of oil, if it was sustained at a very high level, would have a negative impact on economic growth, and therefore would have a negative impact on earnings and the equity market. I think that actually an Iraq war, if it is contained as an Iraq war and doesn't spill over into a wider conflict, will actually not have a negative impact on equity markets.
You and I have spoken about this before. You've had experts into Citigroup to talk you through the various military scenarios. I mean, you still think that the Iraq war will be contained to the extent that it won't worry markets. You don't see Israel, in the light of recent events, playing perhaps upping the ante, if you like.
That's the risk factor. You know, I'd possibly put a 20% probability on that. I think the main scenario, because the allies as well as it is are aware of those possibilities and those dangers, and I think they'll be playing it very carefully. And you've certainly seen political pressure, on Israel to keep that side of things, relatively quiet.
Guy.
Nigel, it's the wrong war we're talking about, though, isn't it? Shouldn't it be the war on terrorism that actually really worries the markets at the moment, because that's the risk they can't quantify?
Yeah, I think you're absolutely right, Guy, because that is something that we can't quantify, and we don't know where it may impact next. And that is an underlying certainty, which certainly means that we do have an increased equity risk premium within the marketplace because of that uncertainty factor. But I think that's part of the reason why markets are where they are. I don't think that's going to be a driver to push markets significantly lower from current levels.
I've been hearing calls, and some people have talked about it, of Brent going up to $50 a barrel if things go wrong in the Gulf. Is that a possibility?
No, certainly we don't see that. I mean, I think to justify that kind of price, you really have to see a much wider Middle Eastern disruption to supply, which you're not really going to see if you just have an Iraqi war. That is a much larger Middle Eastern type problem.
I'm surprised, Guy, that you think that the war on terror with this low-level terrorism that we're experiencing at the moment is a huge issue for the markets. They're very cold and calculating.
It's something that they can't understand. We know what Gulf wars look like. We know what happened in Afghanistan. We know that actually the markets tend to get more upset about these things than actually turns out to be reality. That's been the situation in the last few conflicts. The thing that's caught the markets really by surprise have been big events, 9/11, the Bali bombing, etc., that have really continued to provide this level of uncertainty under the markets. A conventional war you can quantify. A war on terrorism you can't quantify, and I always understood that the markets didn't like uncertainty, and therefore, to my mind, that stands out as being a potentially bigger issue.
Well, I'm just thinking on the top of my head now, maybe this is an irresponsible thing to say. I would have thought that provided that a war is not fought on American soil, provided there is not conflict on American soil, that actually the markets will broadly ignore most things that go on, will they not?
I think that's probably fair to say.
If you look at theatres of war,
9/11 certainly proved that. But if the war in Iraq goes wrong, casualties is something you're not taking into account there. If you get large-scale casualties in the Gulf War, then that would be a problem, for instance, if you were fighting street to street, and that turns, and all the models that the US military have been running, the casualty levels are very high, and that could be about bad news. But if you get large-scale casualties as well, for instance, American tourists or whatever being killed as well, that could further undermine confidence in the markets that overall the situation continues to look as rosy as people think it is, because they will destabilise other parts of the world.
You're the expert.
Well, I mean, Guy, I think you've got some positive points there, but I think the key issue here really is what is the economic impact going to be of any conflict or any terrorist surprise. That's what's important. It's what happens to consumer confidence, what happens to business travel, what happens to capex from businesses. Uncertainty is part of that equation. If you increase the uncertainty, it makes people more cautious. But it's the economic impact rather than the actual direct impact. Obviously, for the people involved, it's a terrible event, but it's the knock-on consequences of that that's really important. It's not the
economic impact, surely. It's the uncertainty of what will happen next, and the uncertainty of the economic impact.
People won't travel, people won't spend, is the argument that I'm making, because Americans don't travel and tend to be more nervous about spending when things planes are being blown up, etc. That's the point that I'm trying to make.
No, you're right, Guy, and that is the knock-on impact. But we already are in that era. Following September last year, we are already in that era of cautious uncertainty, and international travel from the US has been down, and you're not seeing that coming back in a very strong way. US tourists are not traveling as much as they were 2 years ago, and I don't think that an actual fighting in Iraq is going to change that situation. I think the market has that on board. What it would not have on board at the moment is a much wider conflict which would disrupt oil supplies. And I think as long as you don't see that, actually the market would not be too phased by actual fighting.
You've laid out the argument on that front. You still therefore think that the markets are poised to move higher, and you often cite history at me. What does history show you? What kind of bounce should we get out of this scenario from your analysis?
If you look at previous Great Bear markets, the recovery has typically been of the order of 50 to 60% in the 2 years from the bottom. And I think that's where we need to be thinking of, that the market has got that potential to go over the next 2 years. Now,
I'm kind of had 20% of that
probably
on the market, 30%
20, 25. Yeah, you've had nearly half of that probably. And you will get a correction, and that's what we're seeing at the moment. Markets never go one way forever. We're having a correction at the moment, but I think the key difference is this time that there is not the big sellers that we saw in Q3 and Q2. The insurance companies have reduced their equity exposure. You haven't got that forced selling coming through.
So what did you say, 60% over 2 years usually?
50 to 60% is the typical rebound that you've seen after big bear markets.
20% of that means that we've now got 30 to 40% upside on the next 2 years on
I think that's absolutely justifiable, and you can see that if you look at valuation measures, you can justify that. You can see that we're getting earnings growth coming through next year.
A 15 to 20% return each year.
That's, I think, absolutely achievable over the next 2 years.
Plus dividends.
You know, the reason you don't believe that is exactly the reason why.
I didn't believe it.
The reason why a lot of people would say, oh, after the last 3 years, you're never going to see that again, is exactly the reason it will happen. Because people are still bearish, people are still cautious. I see that as great news because the potential for people to turn and actually put money back into the market. You don't want to be having your money in bonds at the moment. You want to be putting it into equities, and it's exactly that time you make real money.
You are the most bullish person we now have as guest host.
I'm pleased and glad about that.
It's a mantle you may regret,
well,
Nigel.
We shall see.
Nigel Bolton from Citigroup Asset Management will be here all morning. If you'd like to enter the debate, we'd love to hear from you. Squawkbox at cnbceurope.com is our email address. The German electronics and engineering group Siemens has just announced it does not see a significant improvement in conditions next year, echoing the interview that the chief executive Heinrich von Pierre gave to the Financial Times earlier in the week. At 9:20, he will join us live. Your comments would be appreciated. The market is already pricing in a cut in interest rates from the European Central Bank today, but can lower rates restore investor confidence, such that it needs to be restored? Invesco's chief economist Jörg Kramer and indeed John Holland will join us from outside the European Central Bank's headquarters as members of the governing body go in.
I'm Axel Threlfall in Market Watch. The ECB is widely expected to cut rates, but by how much? We'll preview the decision.
And I'm Pulawan, also Miles Hayward from Mako Global Derivatives. All that on Market Watch.
"8:30, good morning. This is Squawkbox live from London. Geoffrey Cutmore will be back in the chair on Monday morning. Controversy in Paris. Jean-Pierre Raffarin's government confirms a €9 billion cash injection for France Telecom, but the government warns that the indebted giant may face privatisation or further sell-off on the shares. Siemens gives a gloomy outlook despite the turnaround of its American operation. The German tech giant's US unit reports a full-year profit of €823 million. That compared to a loss of €603 million last year. However, the group says that it sees no significant improvement in economic conditions for 2003. Having amassed 16% of its shares, BNP Paribas now piles the pressure on Credit Lyonnais as its smaller rival prepares for a board meeting that should be starting now in Paris. France's biggest bank demands cooperation and, according to Le Figaro, a seat on CL's boards. The European Central Bank, indeed three central banks today in Europe, the Riksbank in Sweden, the Bank of England and the European Central Bank will all come through with rate decisions at various points during the course of today's session. The ECB, I suppose, the only one of the big three expected to cut rates. The question is, by how much? John Holland is in Frankfurt outside the European Central Bank's headquarters. John, have they come in yet, or is it a bit early for them to start work?
It's a little bit early for all of us to be starting work,
Indeed.
Simon, but that's what we get paid for. And even the ECB has been hard at work trying to figure out how big the size of this cut should be. We are widely expecting a cut. As we know from last month's meeting, that when there was no decision, there was still an awful lot of infighting about whether there should be a cut or not. A majority finally came down in favor of no cut. But now it appears even the Hawks have probably decided to throw in their weight behind some kind of a cut. It might only be 25 basis points. That would be seen as a compromise, but the markets clearly have already priced at least that much in and would like to see 50. The question is whether the ECB is beginning to change its focus somewhat. Well, here to join me to talk about that, Simon, is Jörg Kramer, chief economist at Invesco. Jörg, good morning.
Morning.
Jörg, you seem to believe that the ECB is beginning to change its tune a little bit in the way that they approach these decisions, that they seem to be alerting the markets a little bit earlier. Is that the case, and is that mean that we're moving more towards a Fed style of openness?
Yeah, I would say yes. This rate cut today was very well pre-announced by all the ECB officials, and therefore you're right. The ECB today has more in common with the US Fed than with the old Bundesbank.
And Jörg, do you think that... sorry, go ahead, Simon.
No, mate, you carry on.
I was just going to ask you, do you see some signs that the ECB is in doing a 50 basis point cut, if that's what they are going to do, that would then be it for a while, that would, as it were, continue the trend at least of cuts? We certainly haven't seen one for a while, but it would reinforce the sense of a trend towards further cutting, but then that would be it for a while if they do 50.
If the ECB today were to cut rates by 50 basis points, then I would say that's it. But this is based on the assumption that there's no further slide in leading indicators. If we have a war with Iraq, then of course there is a possibility that the ECB could cut again despite a 50 basis point cut today.
Jörg, this is a very dovish view that you're giving us now of the European Central Bank. And what do you base the argument that they're now more focused on growth? Surely all they're saying is inflation's ebbed away, our expectations are coming down, now we therefore have an opportunity to cut rates.
Okay, they like to talk about inflation. This is true. But the main factor behind this is a growth outlook. You saw it very clear prior to the summer break. Prior to the summer break, everybody expected the ECB to hike interest rates because all the leading indicators were up. Inflation was also up. And then after the summer break, inflation was still above 2%. But after the summer break, when all the leading indicators went down, a rate cut discussion starts. This is a clear indication that in the end, it's the economic outlook which is important for the ECB, not only inflation.
But you're not talking about a fundamental change in the way that they operate or the way in which they view their role. What you're talking about, forgive me if I've misunderstood what you're saying, you're talking about the economics having changed.
Yeah, the economic outlook has changed over the past couple of months. Leading indicators were very weak, and this is the driving force why everybody today expect the ECB to cut.
Jörg, it's Nigel Bolton here. I mean, one of the concerns the ECB has mentioned in the last few months has been the politicians and the fiscal imbalances that are running in a number of in the countries. Do you think that actually might delay rate cuts further? Because we're seeing a number of governments breaking the Maastricht requirements.
Yeah, well, the ECB has the obligation to warn against governments which runs excessive budget deficits. But this is no problem to price stability or to the business cycle, because we have deficits, yes, very high deficits, but they are unlikely to fuel inflation today. Therefore, the ECB can concentrate on the weakening growth outlook, and they can cut interest rates, and it's okay when they simply warn against excessive deficits.
John, you move amongst the Frankfurt financial community every day of your life. Is what Jörg is saying actually representative of sentiment at the moment in the market overall?
Yeah, I would say that that's probably the case, Simon. Clearly, the ECB has been taken to task quite strongly over the last 13 months for not moving at the kind of speed that the Fed has in trying to stimulate growth. But of course, we have divergent economies here to deal with. We have inflation rates varying from 3.5% to 4% in Spain and Ireland down to around 1% here in Germany. But the feeling now is that even with the possibility that we could see stagflation come into play, the overall riding factor is that growth has to be stimulated at some point here in order to get things going, and that if someone has to make the first move. They've been chasing each other. The dog's been chasing its tail, trying to blame the other for not kicking this process off. And now the feeling is finally, well, Schröder appears to be on his knees here in Germany with critics at his throat for not making structural reforms. So now perhaps the ECB will ride in and finally say, all right, we're going to take some of the pressure off and cut rates. So the feeling is that, yes, it is high time for the ECB to hold up its end of the bargain and at least try to stimulate growth, even with the possibility, of course, of external shocks coming in later on, like a war in Iraq, like higher food prices, possibly fueling inflation down the line. The feeling is the market sentiment needs to be fed, and fed in a bigger way.
Do you mind, John, if we just go back to Jörg, because these interest rate discussions always seem to be very academic. Mr. Kramer, if I'm just an ordinary investor in these markets, what am I to make of all this? Does it change my investment decisions? Should it change where I invest, what I buy and what I sell?
Well, I don't think so. First of all, we said it, this rate cut today is very much expected by the market. Nevertheless, one has to see that this is a rate cut within a rate cut cycle. The rate cut cycle started in spring last year, and therefore this does not make a big difference for equity investors. The good thing, of course, is that the ECB tries to spur economic growth, which long term, of course, it's not bad for equity investors.
All right, Jörg, thanks very much for that. Simon, did you have a follow-up?
No, I was just going to say it's good to talk to you both. What time do we get the decision? Just remind me, is it 1:45 your time?
For the viewers, 13:45 CET, the decision comes out, and we will carry the press conference with Wim Dousenberg starting at 14:30 CET. We'll get explanations on why he decided to do what he did, whether it's 25 or 50, which is the widely expected view here.
John Holland and Jörg Kramer, who's the chief economist for Invesco in Frankfurt. Thank you both. Let me just come back to you, Nigel. Do you agree with that this is irrelevant for investors broadly?
No, I don't. I think actually what the key thing here is actually this is the start of a prolonged reduction in interest rates for the ECB. To some extent it is irrelevant today because the market's already priced in 25. If it gets 50, I think that will be a little bit surprised, and we'll probably see some of the financials run on the back of it, some of the cyclicals. But our expectation is that this is the first stage in a series of rate cuts over the next 6 to 12 months, and that will actually convince investors that we have moved from the ECB being concerned about inflation, and that's been certainly a negative from the point of view of equities in Europe, to a growth path, and that is actually very important.
Just give me your thoughts to the extent that you have them on the Riksbank in Sweden. We assume going to leave their rates at 4%, I think I'm right in saying, and rates in the UK at 4.25%. Guy, are we still at 4.25% in the UK? You know these things.
I think we are, but I'm sorry, my mic up, but don't quote me on that. I'd actually have to go away and check.
Just
keep
remind
keep
us
the majors in my head, but that one I probably don't.
Just remind us of why we find ourselves in a situation where the ECB, with lower rates, is going to cut, and still the others will hold firm.
Well, it really looks. You're looking at GDP and domestic demand there. You're looking at Germany, which is teetering on the edge of negative GDP growth and a recession, whereas the UK and Sweden, but certainly the UK, you've got very strong domestic demand. The UK, it's the traditional UK model. We've got very strong consumer. It's been driven really by the property market, equity withdrawal. So that's going to hold the UK central bank back in terms of any reduction in interest rates there.
Our graphics and indeed my producer confirm actually that rates in the UK are at 4% at the moment. You see, often people come on and they'll say, invest in the United States because interest rate policy has been more responsive there, rates are lower, you're bound to get better growth. I can't apply that to these marginal differences in rates around Europe, I assume. I can't say you're better off investing in the Eurozone because you're coming off a low base, maybe you'll get a bigger bounce.
I think actually there is an interesting shift. If you look at the performance of markets, over the last year or so, the UK was actually performed relatively well when we had the declining markets. Over the last couple of months, it significantly lagged the bounce. And I think what we will see over the next few months is actually a further continuation of the recent trend in that continental Europe is likely to outperform the UK. Markets are all to do with change. It doesn't really matter that we have rates at a low level. It's where rates are moving, whether they're falling or whether they're rising. And the falling rates in Europe, I think, will actually be the spur for equities within continental Europe.
And what about psychology? Because for a long time now, in advance of the German election, we were raking over the coals of the problems that Germany had, whether or not it was a proxy for the Eurozone. Now I notice in the United Kingdom, the debate is beginning to be, yes, look, there are holes in the budget. Yes, look, they've got to borrow this amount. Yes, there are these off-balance sheet items. And I wonder whether that psychology will play back or broadly whether it's actually relevant.
No, I think you're partly right. I mean, it was certainly 6 months ago, UK was seen as being a beacon of growth in a global environment where growth was very, very scarce. And I think, now we're seeing the ECB, well, we will wait to see today, but we expect to see rate cuts, and we expect further rate cuts over the next few months. That will be a positive stimulus for growth, and that's what equity markets will like.
Guy?
I thought you were asking about the Riksbank earlier on. Obviously, UK rates are 4%, so I didn't quite hear you correctly there. Nigel, the budget, the borrowing in the UK is going to have to go up. We heard that in the budget. Presumably that is something that eventually we'll have to force, and it doesn't look like it's going to turn around anytime soon, but it's eventually going to have to force the Bank of England to raise rates.
No, I don't think so at the moment, to be honest with you. You know, the key problem there will be if we see inflationary pressures coming through within the economy, and we're really not seeing that. You know, it's really only housing market, asset prices in that particular area of the economy where there's any really significant inflation going through. We certainly don't see it in the manufacturing sector, even in the service sector. That's come off as well more recently. So I don't think that's a major concern. And you know, in terms of raising capital, the old argument was the public sector will squeeze out the private sector. I just don't see that as being an issue at the moment. I really don't. I'm not concerned about that budget deficit. You know, in the context of the size of budget deficits globally, I don't really think it's a major issue at the moment. I think it's actually the right thing that we're doing to keep the economy coming through when the private sector, ex the housing market, has actually been quite weak.
We're going to get in the second half of the show, get down to some of the individual stock stories and where you think people should move some cash. But for the moment, Carl writes from Houston in the United States. I do not wish to disagree with Mr. Bolton, but as soon as the fact was revealed that UN inspectors had found mustard gas at the facility they inspected Wednesday, the S&P 500 futures dropped 13 points between 4 and 4:10 p.m. Eastern Time, only to recover to finish 6 points below its high. If there is a downturn in reaction to a conflict, should one occur, how long would he expect it to last? So he's basically breaking your assumptions. Assume that we do get a downturn. How long would it last?
Remember the Gulf War 10 years ago? You know, we had that sort of 6 to 7 month build-up of forces, and when the action actually started, that fall in the market then was your buying opportunity. And I think it's probably going to be a similar case this time. The only danger to that is if you get a wider involvement, if the war or fighting gets outside an Iraqi situation and has an impact on the oil supplies.
Let's catch up with the latest international news and see exactly where we are. Serena's joined us in the studio.
Thanks, Simon. Good morning. Iraq has accused UN weapons inspectors of spying for the United States and Israel. Vice President Taha Yassin Ramadan also claimed the inspectors were guilty of provocation, saying a visit to a presidential palace had been intended to trigger Iraqi resistance, giving a pretext for war. Pressure has also mounted on the inspection team from the White House, which has indicated yet again that it feels the searches are not satisfactory. The Macedonian consulate in the southern Pakistan city of Karachi has been severely damaged by a bomb. 3 bodies have been recovered from the wreckage. One of the dead was a security guard who's believed to have been killed before the explosion. Police believe it was a terrorist attack, but no one has claimed responsibility yet. Turkey now, in its ambitions to join the European Union, could move a step closer in next week's summit in Copenhagen. Chancellor Schroeder has promised that Germany and France will together send a positive message to Turkey at the summit. Sangatte now and a group of Iraqi asylum seekers have left the refugee camp in France, heading for the United Kingdom. More than 40 men are the advance party of 1,200 asylum seekers who are being accepted by Britain as part of a deal to close the controversial camp near Calais. The men will arrive later today and will have 4-year work visas. On to Europe's weather for you. Fine through Iberia, but in the eastern Med, look out, rain and thunderstorms about. Becoming cold, heading north with cloudy periods through western Russia and Finland. Snow through Sweden and Norway. Expect more of that rain through the Low Countries and Paris, but it should be a pretty fine day for most of the UK. Top temperatures in Europe for you. Copenhagen 4, Dublin looking pretty nice, 8 degrees centigrade the high. Stockholm not so nice, -1 the high, -3 the low. That brings you up to date with the very latest on the world news front. Simon.
Do you like my tie?
It's not bad, actually. Quite flashy.
Very pleased with it.
It's Elton John's tie.
It's not. Can I touch it? Can I?
Get it off. You know he's selling off all... I was wandering aimlessly through the West End. You know he's selling off his wardrobe. And I came across this shop and it was full of like heavy bouncers outside and loads of people having a great time. It's like all his wardrobe's being sold.
What else did you buy, Simon?
I thought it was best in the circumstances actually to stick to belts and ties. I thought anything, you know, other than that might be a bit risky. So there's lots of Versace belts for the ladies for Christmas.
Well, I hear some of the outfits are going for about £35,000. Begs the question, how much did he pay for that tie?
Well, full price, actually. It's not cheap, I tell you, but it is for charity. We're going to take a quick break. After that, we'll obviously hear from Siemens. They should join us on the programme, or at least the CEO, Heinrich von Pierre, will join us in about 35 minutes' time. They've got their investor conference today, as you may well be aware. If you'd like to challenge or support Nigel Bolton, our guest host, Squawk at CNBCEurope.com. 11 minutes to the hour. 11 minutes, of course, to the start of trade this Sinterklaas Day for those of you watching in the Netherlands. Let's get out to Dan Mann, checking in on the bond action.
Simon, very good morning to you. And traders have really been waiting for this one for some time, particularly bond traders, because they have been putting on bets for many, many months now. Now, the bets they put on the interest rates will go up and down. The interest rate futures really have seen some huge activity the last few months. Volumes have been absolutely rocketing, and these products are absolutely priced to go. The front month is pricing in rates of below 3%. The following month, the spring contract for March is pricing in rates a little bit better than that, but there are lots of permutations. The press conference, believe it or not, is going to be just as important as the decision. If we get 25 basis points and we're then told at the press conference that we're going to get 25 more or more rate cuts to come, that could increase the volatility. If we get 50 basis points, we might be told at the press conference 45 minutes later that that's it. So one thing, the decision, the next thing is going to be the press conference. We've also got at the very same time, or within these few days, futures expiry as well. So that is only going to add to the volatility of all these products. But hopefully it will be fun. Guy, good morning, and over to you.
Certainly looking forward to a little bit later on, as is Axel Threlforth, who'll be taking us through all those rate decisions a little bit later on. He can barely wait, you know that. He is absolutely rip-roaring ready to go on this particular one. In terms of the markets, we are trading up just a fraction on the CAC futures ahead of the open this morning. Positive bounce towards the close of the US session yesterday. It didn't take us into positive territory, but we did bounce, as a result of which we are likely to see a pickup towards the beginning of trade today. The stories out there today, we've covered a lot of them already. France Telecom is a big restructuring story out there. It obviously takes in Wanadoo, it takes in Orange, where we've already seen senior resignations. So that's going to be a story. 9:45 Paris time is the press conference. Siemens, soft outlook. They are not positive about 2003. Let's get over to Dan Scott. He's going to take us through this story. Morning to you, Dan.
Good morning, Guy. Like you say, Heinrich von Pierre already coming through and saying that he does not expect to see a significant economic upturn in 2003. On top of that, overnight we had Moody's coming through and knocking down the credit rating outlook to negative from stable on Siemens because of recurring underperformance at some vital divisions, in particular the telecom equipment division. So that's going to be something that factors into trade there on Siemens. Overall, 33.20 is where this market closed yesterday, 40 points higher. We're expecting to see some moderate gains again this morning, about 20 points at the open, but really it's going to be the ECB that determines direction for this market. Will it be 25? Will it be 50? It looks like the market so far is leaning closer towards 50. So that's going to be the central theme there, and that's going to be what determines direction. Before that, likely to have volumes fairly thin. Back to you, Guy.
Much indeed, Dan. Just looking at a note Steve Sedgwick sent me through in advance of the open with a few of the market calls. The media sector coming through strongly from Goldman Sachs this morning. They're downgrading to inline from outperform Granada. They've downgraded Publicis, reiterating an underperform on Imperial Tobacco. Lots else going on as well. Though Deutsche Bank upgrading Compass Group this morning. JP Morgan reiterating an underweight to neutral. From neutral are Saint-Gobain this morning. Just a few of the broker calls we're already getting through here at CNBC. Elsewhere, Six Continents is going to be a big story in the UK as well. They're saying that the hotel story is actually looks as if it's weakening. Cadbury's, we're going to get an update later. Are they going to buy Adams? That's the story that everybody wants to know. ThyssenKrupp as well. Profits down, but broadly in line with expectations. It is Sinterklaas Day, as I'm told the pronunciation is, over in the Netherlands. Well, it's this evening. Basically, everybody goes home early, and then it's Sinterklaas Day tomorrow. But Ray Frenken knows all these things. Morning, Ray.
Good morning. Yes, well, today is the eve of Sinterklaas Day, and that is the really important day for the Netherlands. A lot of Dutch kids get their presents from St. Nicholas. A lot of adults get surprise presents, and maybe we're getting a surprise present today from another Dutchman, Wim Duisenberg, who would, by the way, make a really good St. Nicholas. He has an abundance of white hair already. The only thing that he lacks is a beard. As for the market over here, we're looking at a marginally higher opening over here, 345 on the AEX index. A number of news stories out there. Ahold making an acquisition in the food service sector, buying a company with sales close to 250 million and bringing the total food service sales to $19 billion in the United States. They're not saying how much they're paying for Allen Foods based in St. Louis. And Reed Elsevier coming out earlier this morning reiterating their outlook for double-digit earnings growth, but that was something that analysts had expecting. A number of other stories here in the Netherlands as well involving Aegon, for instance. Aegon has been slapped with a court case by Dexia. Dexia wants to unwind a merger worth €900 million of La Boucherie Bank. bank made in 2000. And Labouchere Bank, of course, is that unit that has been selling some equity lease products to about 35,000 Dutch private investors. They are suing Dexia now for close to 1 billion euros. But Dexia, which is reporting third quarter earnings in Brussels today, may be actually inclined to make an offer of several hundred million euros worth. So that could be affecting both Aegon and Dexia. And then also keep an eye on KPN. KPN has said in the past that they are considering EU court action if the European Commission approves state aid to France Telecom. Guy.
Ray, are they taking down the open outcry thing behind you already? It sounds like they're knocking it to bits.
There's only one more trading pit here on the trading floor. That's the AEX pit. There's about 30 or 40 traders still in there. But around there, all the other 40 or so trading pits, they're taking that down. And they're preparing for a big party, a New Year's Eve-like party tomorrow night. And there will be a bar on the trading floor.
Ray, what about that fantastic little bar restaurant that used to be the barber shop outside? Is that going to remain?
It is remaining, but it's no longer open for business every day. They've already closed it down, but it can be open for special parties at the request when you ask Euronext about that.
Tragedy.
That's a big tragedy, actually. It's quite a nice little place.
Yeah,
it was. I've been there a few times as well. These are the stocks you need to be aware of. Ray, Frenken, thanks very much. We're going to obviously cover that story tomorrow with the celebrations at the end of Open Now quite extensively here on CNBC. Those are the main stories you need to be aware of. France Telecom and Siemens are going to be two big stories. 6 continents. I'm already looking at some downgrades there coming through. 6 continents is trading down 5% at 5.20 pence. I'm told pre-open. Cadbury's is going to update us later. ThyssenKrupp profits down, but broadly in line with expectations. Flash coming through at the moment related to Orange, targeting 1,000 to 2,000 job cuts in a job cutting program. The futures look like this right now. We are trading up in positive territory across many of the markets and picked up a little bit since we last checked in, up some 0.7%. 3232 is where we're trading at the moment. Obviously, the ECB is going to be a big event later on. We are going to be getting live coverage here on CNBC. Riksbank, Bank of England, ECB. Axel Threlfor up at lunchtime with all of those stories. Stay tuned though, we're going to have the live market data coming up right after this.
Real time.
You're watching Squawk. We're real time.
Real time data.
We're real time.
Live coverage. Real time data, live coverage, Guy.